7 stocks with unlimited upside. That's what we're about to get into in this video here today, folks. I'm going to share these 7 stocks with you in depth and kind of talk about these stocks, why these have unlimited upside. Now, before I get into that, let me address something very important. What does it mean to be an unlimited upside stock? Let me first say, it's very few and far between. I would say 99% of stocks in the stock market have very limited upside over the coming years, right? A potential unlimited upside stock, that's like a 1% type stock. Think of it as these are the type of stocks like kind of an unlimited potential income person, right? Think of the 1%. Think about an Elon Musk. Think about a Jeff Bezos, a Warren Buffett, those legends, right? They have literally unlimited earnings potential, like true. Now, the masses, I would say very limited potential upside to their earnings over time, right? So when we think about a stock that's an unlimited potential upside stock, those are stocks that have decades of major growth ahead. Not just like 1 or 2 years, not like, oh, they got a few percentage of growth here and there, right? These literally have unlimited growth for decades to go in the future. They're the type of stocks that you can hold for the next 10 years, 20 years, 30 years, right? Some people even say these are take them to the grave type stocks that we're about to get into in this video here today. And these are the sorts of stocks that if and when you do ever sell it, you say, gee, that was a dumb decision. You sell the stock and literally 3 years later, 5 years later, 7 years later, you look back and you're like, why did I ever sell that stock? What a bad decision that was. These are the sorts of companies which, when you hold one of these sorts of companies, those are special. The worst thing you ever do is look back and say, oh, I'm so glad I sold that stock, right? That means you held a bad stock. If you say, gosh, that was so stupid, why did I sell that stock? That's when you're in special companies, okay? So that's what we're about to get into in this video here today. Appreciate y'all joining me as always. This one took a lot of time to put this video here to get together for you guys here today, so I hope you appreciate it. I appreciate you joining me. All I ask in return is that you smash that like button, you gently tap that like button, and you hit that like button. I appreciate y'all. If you want to be subscribed to the channel, it's free to do so. You can hit the subscribe button. We just hit a new all-time high subscribers in the history of the channel, 740,966. I appreciate each and every one of you for joining me. Alrighty, guys, let's get into this. Stock number 1 of these 7 stocks is Palantir. Palantir to me is the definition of an unlimited upside stock. When I look at Palantir and their business model, they have unlimited upside over the coming years. It is absolutely amazing. Now, when it comes to Palantir, they have a 4-pronged customer base. They have the U.S. government, which is really their original customer base. If we take you back 20 years ago, 15 years ago, the business model was pretty much solely just U.S. government contracts with a lot of big military operations and whatnot. And that's what Palantir was kind of known for. Now, because they created this unbelievable product and they created this unbelievable engineering force at Palantir through the U.S. government, because when you're talking about if you got the Army using your products, if you have, the Navy using your products, the Air Force, you're talking about very advanced military, U.S. military products, you're going to create likely the best products in the world, the most advanced products in the world, and you're likely going to create the best engineering base among any company out there. And that's what Palantir was able to create. And so they said, you know what? We could be more than just a company that sells government-related products. We got the best breed products. We can use the way we run our company and the way we use our software and data, we can use that for the commercial applications. So a number of years ago, they started to expand slowly into the commercial space. And this is a space that now is growing rapidly when it comes to U.S. commercial. Rapid growth there. They're attracting unbelievable amounts of customers, specifically through their AIP product. Now, additionally, they sell to international governments that are, let's call it, more friendly with the U.S. government. And additionally, they now sell international commercial business as well. So they have a 4-pronged customer base. And think of the government business as maybe a little slower growth, but it's there, right? And it's going to need to be there for decades and decades to go in the future. And they can, build those contracts bigger and bigger over the next 10, 20 years. The commercial space, think about that as super fast growth, especially in U.S. and international will be following behind that. We know U.S. just moves a little faster than others. Now, when it comes to Palantir, this was something great that Andre posted yesterday. Palantir contract value compared to other tech companies that you might compare to them, right? Implied average contract value. Palantir is so far above all of their competition, if we want to call them that. It's absolutely amazing. So when Palantir goes to land a contract, it's not just like any other company, they got a new customer. No. like the deals are many times millions of dollars, tens of millions of dollars, sometimes hundreds of millions of dollars of contract value. It's unbelievable when Palantir goes to, and so Palantir is all about landing a customer and then expanding with bigger and bigger contracts with that customer over time, right? Now, if we look at Palantir, I mean, this is even on a quarterly basis, looking at 1000xstocks.com. Look at this. The growth quarter in and quarter out is up and to the right. How many companies can you count on quarter in and quarter out, the growth going up and to the right? And here's the deal. With Palantir, I don't see this ending anytime soon. And when I say anytime soon, I'm talking decades. Like this is going to go on for the next 10, 20 years, in my opinion, where you're just going to see that quarterly revenue go up quarter after quarter after quarter after quarter for the next 10, 20 years. 10 to 20 years, because Palantir's products are so forward-looking that it's going to be very difficult, let's just call it that, to disrupt those in the next 10 to 20 years. 30 years, 50 years from now, 100 years from now, it might be a different story. But then again, with Palantir's engineering force and the way they use AI and data, I wouldn't be surprised if Palantir comes out with so many new game-changing products and services over this next 10 to 20 years that make what they're doing today obsolete. Like Palantir's products they have in the marketplace today, which are best of breed, I wouldn't be surprised if Palantir makes these products obsolete 10, 20 years from now. Like that's how special this company is, right? Now, some years are going to be faster growth than others for Palantir. Some years they might be growing revenue at 40 or 50%. Some years they might be growing revenue in the 10 to 20% range. But the bottom line is year after year after year, you're going to be able to count on Palantir being there with growth, growth, growth. And regardless of whatever is going on out there in the world, right? And that's phenomenal because there's very few companies you can count on that, right? Additionally, this is a company that's gross margins should likely be 80% plus over the next 10 to 20 years. And when it comes to their net margins, those have increased rapidly. And they still got a long way to go over the next 10 to 20 years. Those net margins for this company long-term could get 40% plus. When we're talking about gross margins, 80% plus, don't be surprised if those gross margins easily get into 30% plus range, if not the 40% plus range. This should be one of those companies that will be like a top tier margin company, not just in terms of gross margins, but really in terms of net margins as well. That bottom line, how much is actually hitting that bottom line, right? Now, additionally, if you look at the earnings per share on a trailing 12-month basis here, right, Palantir was a big money loser, and this is something the bears pointed out in the past with Palantir, huge money loser, right? Well, they flipped, and now they're starting to bring in the money. But we're at the infant stage of profitability in regards to this company, and that's an important thing to understand. Infant stage, there's so much growth in Palantir's earnings per share coming over this next 10 to 20 years. It's going to knock people's socks off. It's going to be ridiculous in regards to this one. Additionally, if you look at the company's free cash flow on a trailing 12-month basis, it just keeps building and building and building. But this, additionally, is at infant stage of free cash flow. Free cash flow, they're going to start pouring in billions of dollars of free cash flow per year. Now, what are they going to do with all that free cash flow is going to be the question. This business model is going to start pouring in billions. They're going to be able to either invest in more and more engineers to continue to build out products and services that are best of breed, right? Or they could invest that money into buying out other softwares if they see other fits, right? And maybe taking more of a sales force type approach where they're selling many different products to their customer base. Like there's so many places they can take it, but the bottom line is when you start producing billions of dollars of free cash flow like this company's going to start doing here, there's a lot of optionality. Do they want to make massive share purchases like share buybacks and buy their own shares back? Like, what are they going to do with the money? That's the big question. But the bottom line is they're about to have a very good problem. And that's where so much money is going to be poured in this business. It's going to be ridiculous, right? Now, additionally, if you look at their operating cash flow, it's still early days, but this is booming, right? Booming in regards to their operating cash flow, which is one of the most important metrics I think people can possibly look at, right? Shareholder equity continues to build for this company. They have a top 50 balance sheet in the market, in my personal opinion, which is unbelievable. Absolutely unbelievable, and especially for a company that just made it into the S&P 500. They already have a top 50 balance sheet, right? Now, the thing with Palantir is people make excuses not to buy their stock all the time, right? When the stock was $6, $7 back in late 2022, in the fourth quarter of 2022, people said, I'll buy the stock when it goes down to $4 or $5. It's overvalued at $6. It's overvalued at $7. It's too risky, right? Then the company went to $15, and people said, when it goes back under 10, I'm going to buy the stock then. Once it goes under 10, I'll buy it, right? And then the stock moved and moved and moved, and next thing you know, the stock went over, like $25, $30 a share, and people said, I'll buy it when it's $20 a share. When it goes under 20 again, that's when I'm going to buy it, right? And it never happened. And now the stock's $40 plus, and people say, you know, when it goes back under $30, that's when I'm going to buy it. Right? When it's $20, when it's $25, right? And there's always this like wishful thinking about like Palantir is going to go to the price I want it at the perfect time so I could buy it at the perfect price. And that doesn't work in reality. You have to buy a company over an extended period of time, right? And that's exactly what I did with this stock and built a very nice size position. What is the position sizing in the public count? 5,555 shares, something like that? Yes, 5,055 shares in the public count. I didn't buy that all in a day. I built that position over a period of time. Now we're up 375%. We're up $184,000 on a stock I put only $49,000 into. That's pretty darn good. So Palantir is the definition of an unlimited upside stock. And that's, in my opinion, one of those perfect companies to show you that, right? Don't get caught up in the short term in regards to Palantir. Focus on the next 10 to 20 years because that's pretty darn exciting. Stock number 2 of these unlimited upside stocks is Shopify. Ticker symbol SHOP on this one. It's an $81 stock here today. And the stock price is up 2,800% since they went IPO. Now, when it comes to Shopify, e-commerce company, right? And here's where we are right now in regards to this one. This shows you Shopify's trailing 12-month revenue over time, right? And this is what their projected revenue is expected to do based upon analyst estimates here. This is a company that has decades of growth ahead. And it's an asset-light Amazon. That's the way I look at it. Amazon went very asset heavy. They wanted to have the whole distribution network. They wanted to own massive warehouses. They wanted to have the trucking fleets, right? They wanted to have it all. And so Amazon decided to go very asset heavy. Amazon's a company I personally own. I love Amazon, right? And they're also very asset heavy when it comes to their AWS business, right? A lot of assets when you're going to run an AWS. And it's beautiful. Great for them. But asset-light business models can also be beautiful when you focus on mainly the software, because that produces you not as much revenue potential, right? Amazon's going to be a company that's going to do $1 trillion plus of revenue. Is Shopify a company that will ever do $1 trillion plus of revenue? Absolutely not. But could Shopify's margins be exponentially better? Could their profitability be exponentially better? Yes, right? Yes. And so when it comes to Shopify, it's an asset like Amazon is the way I look at it, where it just has unbelievable growth over the coming decades, right? Now, when it comes to Shopify here, we look at a trailing 12-month of their free cash flow, and it's clear as day. It is a rocket ship ride in regards to Shopify. They were doing under $100 million of free cash flow on a trailing 12-month basis just a few quarters ago. And now they've already popped that to well over $1 billion plus in trailing 12-month free cash flow for this company. And that's just a matter of a few quarters. Imagine where Shopify's free cash flow is going to be 3 years from now, 5 years from now, 10 years from now, 20 years from now. Can you imagine the free cash flow this company's going to be pouring off in those years? And keep in mind, what are they going to do with all that free cash flow? Are they going to do massive share buybacks? Are they going to buy out other businesses? Are they going to keep adding to their incredible engineering force at that company, right? What are they going to do? Like, there's so much optionality with all the free cash flow that's going to be pouring in for Shopify. Now, one of the beautiful things with Shopify, and one of the things I really appreciate with this company, is they're a company that every business can use them. It could be a mini-sized business. You know, just one employee that's a solo entrepreneur, right? The solo entrepreneur, he's just starting his business, she's just starting her business, right? Boom, they can use Shopify because it's there for them, right? It's affordable. The small business that might employ a couple employees, right? They can afford Shopify. The medium business that might have 10 employees to 100 employees or maybe a few hundred employees, they can use Shopify. And the large companies that have thousands or tens of thousands of employees, if not hundreds of thousands of employees, they can use Shopify as well. Doesn't matter where you are, Shopify, they're the ones for you at the end of the day, right? Check this out. This is our monthly recurring revenue. Monthly recurring revenue. It is now up to $169 million in monthly recurring revenue from their subscription plans with their customer base. That's incredible. Now, Shopify can make a lot of money a lot of other ways outside of just their subscription plans, right? But I think this is very important because you know that's going to be there month in and month out, right? Which is incredible. And, you know, is there a day in the future where Shopify has $500 million a month coming in recurring revenue? Recurring revenue. $1 billion a month? Yes. That's coming, right? And check this out. If we go back to kind of 2019, they had 5 years ago, so $47 million in monthly recurring revenue, and now $169 million. Incredible what this company's doing, right? Now, you may look at Shopify, you might say, it's an expensive stock. True. It's forward P is 69 in the stock. Yeah. Now, keep in mind, Shopify could beat those numbers. So maybe it's a 55 forward P or 58 forward P, right? Because maybe they beat analyst expectations, which they probably will beat analyst expectations over the next year. So, but still, even if let's say it's a 55 or 59 forward P, it's still very expensive when you account for most stocks trade at like 18 to 26 range, right? But here's the deal. Special companies trade at very high valuations. If we look at Amazon over time, right? Amazon throughout much of its history has traded at a P ratio of over 100, or even like negative PEs over time because Amazon was losing money. And that's much of the past 25 years. It wasn't really until very, very recently that Amazon got reasonably valued with PEs somewhere in the 30 to 50 range, right? But that's because Amazon's at a different stage in their business model where people look at Amazon as kind of like a company that's going to grow revenue high single digits to low double digits per year, versus Amazon used to be a company you could count on growing 20 to 30% revenues year in and year out. So Amazon's just at a different stage now because law of large numbers has caught up with them, right? And so Amazon's still a growing company, but it's just not those insane growth rates. Shopify is one of those few companies that you're still going to be able to count on 20% plus growth rates year in and year out for years and years and decades to go in the future, right? Which is why Shopify certainly trades very expensive, right, compared to an average stock. So you got to kind of look past the valuation. You got to really focus on where these numbers are going over time, because Shopify might look expensive now at $100 billion market cap, but just wait until it's a $500 billion market cap and $1 trillion market cap 10, 20 years from now, right? And you'll look back and you'll be like, dang, like $100 billion market cap, man, I wish I was buying the stock then. So that's what ends up happening with these stocks. Amazon, I remember looking at Amazon when that company was just a $100 billion market cap, a $50 billion market cap many years ago, right? And thought, gosh, it's an expensive stock. Amazon's what, a $2 trillion plus company now? Now I look back and I'm like, dang, it was actually very, very cheap back then. So keep that in mind, okay? Stock number 3 of these stocks, before we get into that one, if you want access to my entire library of premium courses, including my Become a Master of the Stock Market course, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, if you want access to my private Discord community through my private group, if you want exclusive weekly videos from me, if you want to know the stocks I'm buying and selling each week in my $2.4 million Fidelity account, the public account, and access to our premium software, 1000xstocks.com, then you can apply with the pinned comment down there. You can click on that, fill out an application. We'll see if we can get you access to all that to take your investing level up to a much higher level than where you're at here today. Okay. Alrighty, stock number 3 of these 7 stocks up here is E.l.f. Beauty. This is a stock that's done tremendous for me over time, up 1,382%. This is a stock that it's an incredible company, absolutely incredible company. Check out this chart right here. This is where we are right now, trailing 12-month basis when it comes to revenue. Beautiful when it comes to this. This is the sort of chart you want to see in your companies over time. Incredible what this company's done to become a major player in the cosmetics and beauty industry over the last number of years. Now, keep in mind, if you go into a Target store, right? Go into a Target pretty much anywhere in the United States of America and go to the beauty cosmetics area. And you're going to be like, oh my gosh, like E.l.f.'s the big player here. Like they usually have the most customers around their section. They usually have sometimes even the biggest section of any of the makeup brands, cosmetics brands out there. You'd be like, wow, like they're the big dog. Like you kind of get the feeling of like they're the big dog company. But the reality is, E.l.f. is still a little underdog in this category, despite all the shelf space they have now and all the volume they're doing and the growth rates they're doing, right? Look at this. This shows you these sorts of companies over time. Look at where E.l.f.'s at, right? A little over $1 billion in trailing 12-month revenue. Great number. It's nothing compared to these other guys. L'Oreal, $44 billion. Unilever, $26 billion. Estee Lauder, $15 billion plus. P&G, $15 billion plus. LVMH. I mean, you look at these numbers, these other companies, right? And L'Oreal being the big dog of the space. And you just got to understand, like, E.l.f. has a long way to go of growth. When we talk about companies that have 10, 20 years plus of growth, but here's the thing with E.l.f. that's so beautiful. If you look at their relevance with the younger generation, let's call it 30 and under, their relevance is higher than all these other brands probably combined, honestly. It's ridiculous in terms of their reach on YouTube, Instagram, TikTok, everywhere you really want to be. They're relevant with those sorts of folks, which are the next generation of folks that will be buying these products for the next 5, 10, 20, 30, 40 years, right? Now, when it comes to E.l.f., you look at this stock. It was $210 back in the summertime, and now it's $107 today, right? Had a massive crash in regards to stock. Don't get caught up in the short-term growth rates, because that's what a lot of people get caught up into. they get caught up in these short-term growth rates and they feel great about the stock and the stock explodes to upside. They feel bad about the stock and the stock explodes to downside rate. And if I took you throughout E.l.f.'s history, the drops in the stock are significant when it does drop, right? This was a huge drop. This was a huge drop. And then this was like a monumental drop here recently, right? Don't get caught up in the short-term crap that goes on with this company. E.l.f. has reached escape velocity in regards to their brands in the cosmetics. They're on their way to becoming a giant in this industry. They're at escape velocity. Like, they're going to be big around the world because they're so big on social media. People know E.l.f.'s brand all over the world. And that's beautiful. So when they go to launch in a new country that they really have no real business there yet, they're already known on the ground by customers because they've seen it on Instagram, they've seen it on TikTok, they've seen it on YouTube, they've seen the products, they got interest, right? So it's unbelievable. So E.l.f. is a company that will be on the pace to be a $10 billion plus a year revenue company. They've reached escape velocity with this one, which is absolutely incredible, right? Now, E.l.f. today, about a $6 billion market cap. You look at something like L'Oreal, about a $215 billion market cap. Somebody like an Estee Lauder, which Estee Lauder's stock is in a bad place right now. Their stock has crashed immensely over the past number of years. Even after the insane crash with Estee, still a $32 billion market cap. So it really gives you some insight on how much upside really is out there for E.l.f., right? Now, when it comes to E.l.f., if we look at trailing 12-month earnings per share, right? Obviously, they're bringing in profits. They're not even really focused on profits right now. But the profits they are bringing in, they're going to be able to use those profits to either invest back into the business, right? Or they can buy up-and-coming brands. And that's something they've been doing where, like, look at this deal they did back last year. E.l.f. Beauty to acquire Naturium for $355 million. Now, this Naturium brand, big in the skincare space. E.l.f.'s not as successful in skincare. They're much more successful in cosmetics. So this is a huge breakthrough for E.l.f. when it comes to skincare. Now, this Naturium brand was expected to do about $90 million of revenue in 2023, and it's growing rapidly. So when we think about, like, where could that brand be? My guess is E.l.f.'s going to be able to scale that brand out to be able to do hundreds of millions of dollars a year in revenue, if not billions of dollars someday, right? It's going to be a growth over time. And keep in mind, E.l.f. has distribution, getting distribution now all over the world. So they're going to be able to buy out other brands and then get them that distribution much easier all over the world, which is absolutely phenomenal, right? So they're on their way to becoming a true cosmetics giant and not just a more niche player or a smaller player in the market. They're on their way to becoming a giant in this industry. Now, 9 days ago, I did a very in-depth video called Buy E.l.f. in Celsius stock and Don't Stop. So if you want to hear me talk much more in depth, I did a whole 30-minute video just dedicated to E.l.f. and Celsius in that video. If you want to check that out, you can definitely check that out there on the channel, okay? Number 4 of these 7 stocks up here is Sofi Technologies. You want to talk about stock with unlimited upside? We call them the bank of the future. And the reason being is they're attracting the younger generation at a rapid pace. When I say the younger generation, I'm talking about millennials, I'm talking Gen Z, and they're the most well-positioned to attract Gen Alpha over the next 10, 20 years. Where very different than the, let's call it maybe the older generations that were very accustomed to just going to the physical locations and starting a bank account through that. Wells Fargo, Bank of America, Chase, Citibank, those sorts of ones. SoFi is really attracting that younger generation that's really digital first. So they're the bank of the future. So far, we're up 39% on the stock, but I really think it's just a start in regards to SoFi. Now, check out SoFi's revenue, trailing 12-month revenue over the last number of years. It is up and to the right, exactly what you want to see. And guess what? The same thing with their customer chart. The customer chart is very similar. Basically every quarter, they got more customers in the last quarter. They just continue to attract market share, steal more and more customers, which at the end of the day, as their customer base gets more money, right? Let's say they attract an 18-year-old, their first bank account. As an 18-year-old gets more wealth over their 20s and then into their 30s, you know what that does for SoFi's profitability over time, their assets under management over time, the amount of products that SoFi can sell that customer over time. Because SoFi attracts a new customer, they might not be able to make much from them initially, but over time, that person's might get a SoFi credit card. They might take out a home loan through SoFi, get insurance through SoFi, right? Or their partners, and SoFi can make kind of middleman money on that, even if the money's not going directly through SoFi in terms of actually like taking the underwriting of that. I mean, there's just so many opportunities for SoFi, right? Car loans, I mean, it's insane. So SoFi is a magic kind of bank, but additionally tech, and being the middleman to facilitate all these deals since they have so many customers. So SoFi might actually end up building out to be a very asset-light business model over time, which is incredible, right? And so SoFi, a lot of people try to figure out, is it a bank or is it a fintech? I look at it as across the two. I look at it as a bank in some ways, and I look at it as a fintech in other ways, right? Now, SoFi was one of the stocks I featured on this particular video 7 days ago called 3 High Potential Stocks to Turn $1,000 into $1 million. You might want to check out that video if you want to hear more in depth about SoFi specifically, okay? Number 5 of these 7 stocks up here is Cheesecake Factory. This one has unlimited upside over the next couple decades here. The beautiful thing about cake is it's a growth stock and it's a dividend stock, and getting at a value prices, okay? Now, we all know Cheesecake Factory brand, super famous pretty much around the world, unbelievable. Like, if you had never heard of the Cheesecake Factory, I don't know what you've been doing. Have you even been on Earth? Because almost everybody knows the Cheesecake Factory. Insanely famous restaurant, right? But the brands under cake are about to get very, very famous over the next 10, 20 years, right? And they did the greatest deal in the restaurant industry, I think, of all time. And I think we'll look back 10, 20 years from now and be like, that was the greatest deal in the history of the restaurant industry. Absolutely unbelievable, right? So basically, back in 2019, summer 2019, they acquired Fox Restaurants, and they acquired it for $353 million. Now, this didn't make huge news at the time, and then right after that, we had Rona, right? Rona started getting kicked off at the beginning of 2020, and the whole restaurant industry got shut down. So that whole big deal there kind of got forgotten about by Wall Street or anybody really paying attention, because then the restaurant industry was like a no-touch for a while there, right? No one really wanted to own these sorts of companies. But this is, in my opinion, going to be looked back at as the best deal in the history of the restaurant industry. And the reason being, the brands they acquired in that deal are absolute bangers. So one is North Italia. This is a banger national concept you're going to see in every single major city, and probably multiple locations in every single major city throughout the United States of America, and maybe even international long term. Unbelievable. And, you know, look in your city, you might already have a North Italia. Go there, experience it sometime. You'll have your flapjacks flipped. It's going to be phenomenal. Now, even bigger than that, one of the brands they also acquired was a brand called Flower Child. My opinion is this brand might end up being much bigger than North Italia. It might be. And the reason being is this brand is positioned so perfectly. North Italia, a little more upscale, so you're probably looking at $20 to $40 a person, right, for North Italia. A little more expensive. Actually, probably more to $25 to $40, right? It's a more traditional dining out experience, great time. You might buy some drinks when you're there, which might take your tab up to $50 a person or $60 a person or something like that. Flower Child, let's call it, this is affordable to masses. This is like you go to Flower Child, you're getting out of there for less than $20, usually most of the time, right? But they're also positioned so perfectly because they're healthy. They're seen as a healthy option in a world of very unhealthy options, right? Which definitely resonates with a lot of the younger generations as well, right? Whereas, you know, a lot of the folks' parents might have said, let's go to McDonald's, let's go to Burger King, let's go to Wendy's, right? Maybe places that aren't seen as the most healthy places. Whereas the younger generations are looking for more healthy concepts, right? And so Flower Child's positioned perfectly because not only are they seen as healthy, and by the way, the best concept in regards to kind of understanding the healthy wave was certainly Chipotle, right? Of like higher quality ingredients, higher quality food seen as healthier was Chipotle, right? But Flower Child could be massive, not just because it's healthy food, but also delivery. It's so well positioned for delivery, and we live in this age of like delivery just getting bigger and bigger. Uber Eats, Grubhub, and all these different apps, right? This is the age of delivery, and it's about to get a lot bigger over the next 10 years, and Flower Child's so well positioned to capitalize on delivery over the next 10 years, right? And then the masses is really affordable to the masses. Like I said, you go to Flower Child and you're out of there for less than $20, which is kind of the magic number if you really want to be affordable to the masses out there, right? Additionally, they have Blanco, which I would say is kind of can be more of a regional play. I'm not convinced that's going to be a national player, but very successful regional player over time, in my opinion. Culinary Dropout will be a national success, in my opinion, but it's going to be a limited national success, where I think many states might only have 2 or 3 Culinary Dropouts, when I think many states could have 5, 10, 15 North Italia. So, you know, there's just a much bigger opportunity for North Italia than Culinary Dropout. Culinary Dropout has to do big volumes. They build big locations. It's a pretty epic experience when it comes to that, right? So the moral of the story is, like, Cake bought out just all these unbelievable restaurant brands that are at the infant stage of like their amount of locations, and they're about to expand those locations, which is going to expand revenue and profitability in an immense way. And the great thing is, you look at the reviews of all the different restaurant concepts, They're insanely high. Like you're going to see 4.4s, 4.5s, 4.6s, 4.7s. Phenomenal. They do it well, man. They do it very, very well. Now, if you look at the biggest players in the restaurant industry, you're going to find like there's a long way to go for Cake. Cake's a $2 billion market cap. But I have no like, how would I put it? I'm 100% convinced Cake's going to be a top 10 restaurant company in regards to market cap over the next decade. 100% convinced. Because none of these companies have this many brands underneath them that are going to be huge successes. None of these companies. And many of these brands own some brands that are falling off. And I mean falling off bad and are going to fall off a lot worse over the next 10, 20 years. So a lot of these companies, you're going to actually see major drops in them over the next 10 to 20 years. Versus Cake, you're going to see a major come up because all their brands are going to get much, much more relevant with a lot more locations, right? So that's something to kind of keep in mind there. Now, in regards to Cheesecake Factory, I also spoke about it in this 37-minute video here. 5 stocks to buy now, October 2024 edition. So that was one of the 5 stocks featured there. So if you want to check out and hear more in-depth opinion about Cake, check out that video there, the October edition of 5 stocks I'm buying now, okay? Alrighty, guys, next one up here. What are we on to? The sixth stock of the bunch? I think it's a 6th stock. That is Celsius Holdings, ticker symbol CELH on this one. Now, this is a newer buy for me. So far, I have 520 shares in the public count, $16,700. And I want to add this one aggressively over the next 3 to 6 months. I mean, aggressively. Now, if you live in the United States of America, it feels like Celsius is already a drink giant, does it not? Like you go to, like they took this picture at Target the other day. Like, look at this. I mean, Celsius, a big pack, sold out all over the place. They have this massive can section. It feels like Celsius is just as relevant, if not more relevant than like Red Bull or than Monster, right? It seems like they're already a drink giant. You look at this picture somebody in the private stock group posted the other day. Grant posted this one a couple days ago, right? Look at this. Celsius, Celsius, Celsius. I mean, it's unbelievable, the display there, right at the front of the store. It feels like they're giant. They're a giant, man. They're a drink giant. But the truth is, they're actually not a drink giant yet. Look at this guy. This is a trailing 12-month revenue for Celsius, under $2 billion. They're still a little guy. $7 billion market cap. They're still actually a little guy in the drink space. They're not actually a massive player yet. Although when you go to a store and when you talk to a lot of folks, especially if you live in some cities that are more popular cities, right, more populated, it seems like Celsius is huge. Like it seems like they're just a giant. But the truth is, they're still early days in regards to this whole story, right? Now, here's some projections I ran for you in regards to Celsius. Now, keep in mind, Celsius has been growing at rapid growth rates. We've seen growth rates of 50+%, 60+%, 70+%, right? I'm much more modest with my growth rates over the next few years. I have 2025 through 2028, I think they're going to grow at an average of 25% per year, okay? That's my opinion. I believe they're going to grow net income at a more rapid clip of about 35% per year over the coming years. And if you're growing 25% top line, 35% bottom line on average, for a drink company, you're going to command probably a PE somewhere between 40 and 70, right? Now, if we go ahead and run the numbers, that puts in 2028 their revenue a little under $4 billion. That puts their net income of this company let's call it a little under $700 million, right? That puts their stock price in 2028 at around $118 on the low end to about $207 on the high end, which gives me a compound annual growth rate of 38% on the low end and 59% on the high end, right? This is why Celsius is very attractive to me. Very attractive. Net income margins of 18% is not high for the drink industry. There's multiple companies that are way above that for net income margins, right? So the moral of the story is in regards to Celsius, don't get caught up into the short-term growth stuff. There's going to be growth rates that are going to move around. Pepsi distribution. Oh, Pepsi's, got bigger distribution in one quarter versus another. Or they bought too much inventory one year versus another year, right? And they have to work through that. Don't get caught up in all those short-term growth rate crap. Don't get caught up into that, okay? Focus on the long term of where this brand's going. They've reached escape velocity, in my opinion, where this company can expand all over, not just the United States, but into every single retailer and likely even into many international markets. They've reached escape velocity. Just like E.l.f., don't get caught up in the short-term stuff. And that's why I featured E.l.f. and Celsius in that same video. That one there, because I see so many similarities between E.l.f. and Celsius, where these brands have basically reached escape velocity. They have unbelievable growth coming for them over the next 10 to 20 years, right? But they're both at a weird stage when it comes to growth rates where people are like doubting the growth rates and like what numbers are going to be in the short term, and they're forgetting about the long term of these companies, which is absolutely unbelievable. Don't get lost. What is the great saying? Don't get lost in the weeds looking for the forest or something like that. What's that saying? You guys know what I'm talking about. Let me know in the comment section. You know what saying I'm talking about there. But that's what's happening. The people are getting lost in the short-term stuff in regards to an E.l.f. and a Celsius. And they're going to completely miss opportunity in regards to these stocks, in my opinion. For two brands that are clear, they've reached escape velocity. They're going to be expanding all over the place. And I'm just like, wow, okay, you guys can miss out on that. That's fine. I'll take advantage of that. Let me buy the short-term weakness. Number 7 of these 7 stocks up here is the Honest Company, HNST for this one. I call this Mrs. Watch Me 10X Plus, just like E.l.f. did. That's what the stock. Now, this stock's up 228% in the past year. The stock got all the way down to $1 a share. It was rough, right? Now, you got to understand, when I bought E.l.f., right, and you see it nowadays, oh my gosh, it's such a great gainer. Made 100,000. I sold most of my E.l.f. shares over time, and I regret every share I sold to E.l.f., by the way. But I sold most of my E.l.f. shares over time, and I made just ridiculous amounts of money on this stock. But even with these shares I still hold, I've made $100,000 on only a $7,000 investment, right? Now, when I bought into E.l.f., the company had a lot of issues. They had revenue problems. They were having trouble getting revenue growth. They had margin problems of that company, and they had profitability problems. There were problems all over that company. But I looked at it and I said, this is a company I believe is kind of in the early process of a turnaround here, and all these problems are going to fix themselves. The revenue, the margins, the profitability, all those sorts of things. And that's very similar to Honest in 2022. Honest in 2022, you looked at the company, they had revenue problems. The revenue was actually downtrending. Their margins kept downtrending in 2022, and their profitability was just getting destroyed. They were losing money hand over fist. Now you look at Honest, just a couple years later, and what do we see? Revenues up and up and up, margins up and up and up, and they look like they're just going higher. Profitability up and up and up. Everything's heading in the right direction now for Honest, and that's why the stock has now moved 228% in the past year. It's still a $3 stock that's on its way, in my opinion, to being a $30 plus stock over the coming years. So Honest has incredible upside over the coming years, in my opinion, as long as they keep executing like they've been executing over the last year plus. It looks like Carla, the new CEO of the company, she's been there for about 18 months or so, maybe a little longer than 18 months. She's doing a heck of a job turning the ship around, and I don't see her leaving anytime soon. She should run this company for quite a while to go in the future, and if she keeps running it like she's been running it, I think the revenue story is going to be very attractive here, and the margin story and the profitability story. I'm very impressed with Honest. Honest was one of the stocks featured in this video here, 3 high potential stocks. If you want to check out that video there, I created about a week ago there. It's at about 95,000 views so far, okay? Hope you guys enjoyed today's video. If you want access to my library of premium courses, including my Become a Master Stock Market course, Millionaire Playbook course, Stock Options Mastery course, Dividend Investing Mastery course, if you want to access my private Discord community with myself, the 6 and 7 and 8-figure members in there, right? Exclusive weekly videos from me, plus to be able to see the stocks I'm buying and selling each week, my $2.4 million Fidelity account, and access to 1000xstocks.com. Click the pinned comment down there, fill out a form. We'll see if we can get you access to all that maybe next week or the week after, okay? Much love and have a great day.